Welcome to today's Explainer. We are jumping right in today to tear down the invisible walls of your workplace and look at the absolute bedrock of how work actually gets done. We're exploring the core pillars of organizational design, the architecture of effectiveness. Whether you're running a massive enterprise or managing a tight-knit team, the structural integrity of your daily operations literally dictates your success. So get ready because we are going to unpack the exact elements that separate truly thriving organizations from the ones that are just constantly putting out fires. I want to start by asking you a serious question, and I want you to really honestly think about your own workplace right now. Is your organization built on a rock-solid foundation, or is it a house of cards? It's incredibly easy to just assume things are running smoothly simply because the lights are on and everyone looks busy. But the stakes of poor organizational alignment are staggeringly high. We're talking about massive financial leaks, toxic work cultures, and catastrophic hiring mistakes that can set you back years. A house of cards looks perfectly fine right up until a slight breeze comes along. Today, we're going to make absolutely sure your organization is built of brick and mortar. To understand exactly how to build that foundation, we need to look at what we call the golden triangle: people, process, and structure. These three things are inextricably linked. There's just no substitute for regularly reviewing how these three elements support your organization. Think about it for a second. You can hire the absolute most brilliant people, but if your internal processes are a nightmare, those people are going to fail. You can design perfect reporting structures, but if you drop the wrong people into those roles, the whole thing collapses. Every single day, your leadership, your decision-making, and your governance structures are interacting. And when just one node of this triangle is weak, the entire structure is compromised. Okay, let's dive into this with part 1, process and structure, specifically looking at procure to pay, or P2P. To really see how process and structure interact, let's actively zoom in on the process node of our triangle and look at a high-risk area, exactly how money leaves the building. It doesn't just magically happen. Let's trace the journey of a single purchase. It kicks off at step 1, requisition, where a program staff member raises a request, complete with a budget line and justification. Step 2 is approval. Line managers and finance stepping in to make sure the money is actually there. Then we hit step 3, vendor selection. Here, procurement has to get at least 3 quotes, maybe even run a tender, and an evaluation committee makes the call. Step 4 brings us the purchase order, the actual legal contract. Step 5 is absolutely crucial: receipt and the GRN, or goods received note, which proves we actually got what we paid for. And finally, step 6, invoice and payment, where finance runs a strict 3-way match before releasing a single cent. 6 steps. One continuous, unbreakable chain of accountability. Now, what's really interesting about this slide is how establishing firm, non-negotiable rules creates a highly structured safety net. Look at these key controls. Segregation of duties simply means the person asking for the item cannot be the same person approving it or cutting the check. We've got competitive tendering, like requiring 3 quotes for anything over 5,000 rands, no exceptions. And that 3-way match we just talked about, that means finance is holding onto the cash until the purchase order, the goods received note, and the invoice all line up perfectly. When you combine that with a delegated authority matrix to stop single signatory payments and strict vendor screening, well, these aren't just annoying bureaucratic hurdles. They are literally the armor protecting your organization's resources. But, even with armor, you really have to watch out for the cracks. Red flag alert. Imagine the scenario playing out in your system right now. A vendor is registered and the address on file just happens to match the home address of one of your own employees. Just let that sink in for a moment. Is your accounts payable team actually trained to catch this? Are they out there proactively cross-referencing vendor databases against employee records? Because if they aren't, you're leaving the front door wide open for massive internal fraud. It's a colossal vulnerability, and it happens way more often than business leaders like to admit. And unfortunately, that is not the only financial trap lying in wait. You've got to be hyper-vigilant for these crucial P2P red flags. Keep your eyes peeled for single-source justifications that have zero backing evidence. Why are we suddenly only allowed to buy from this one specific supplier? Watch out for an invoice that miraculously predates the purchase order. That basically means the deal was done off the books before anyone even asked for approval. Look out for sneaky little payments sitting just $1 below the approval threshold to fly under the radar. And above all else, beware the missing GRN. I literally cannot stress this enough. A missing goods received note can mean you are paying for thin air instead of actual goods or services. All right, let's pivot from the flow of money back to our golden triangle for part 2, people and structure, focusing on structuring talent selection. We've successfully tracked the flow of cash, so now let's zoom in on how we structure the selection of the actual people operating those processes. Because honestly, if you put the wrong people inside a flawless process, the whole shebang is still going to break. Structuring talent selection isn't just about trusting your gut feeling when a candidate walks into the room. It is a rigorous three-step framework. Step 1, confirm the job requirement. Before you even think about glancing at a CV, you absolutely must define the tasks and pinpoint the 4 to 6 most critical competencies needed for the job. Step 2 is prepare interview questions, carefully selecting behavioral questions to dig into those exact competencies. And finally, Step 3, conduct the interview, where you actively collect tangible evidence of their skills. Let's move on and see how this builds, because right there in Step 2, preparing the questions, is where things get really dicey. We find what I call the interview question trap. This is where well-meaning hiring managers totally sabotage their own carefully built structures. They sit down across from a stellar-looking candidate, and without even realizing it, they start asking questions that render the entire interview completely useless. The first snare in this trap is the leading question. This is a type of question that prompts the candidate to answer in a very specific way based entirely on how you framed it. It gives them massive, glaring clues about how they should respond. Basically, as the interviewer, you are literally sliding the answer key across the desk to the candidate and just asking them to read it back to you. Consider this exact quote. Do you agree that attention to detail is an important quality at work? I mean, come on, really think about that. Who in their right mind is going to sit there and say, no, actually, I prefer to be incredibly sloppy and make lots of mistakes? Or how about, do you always follow safety protocols? It is a yes or no question where the word yes is practically glowing in neon lights. Let me ask you, do your own managers use these flawed questions? Because if they do, they aren't testing for competency at all. They're basically just checking to see if the candidate has a pulse. So the crucial point here is that while we absolutely have to avoid leading questions, we also need to steer clear of the second trap, the theoretical question. A theoretical question explores a candidate's understanding, sure, but not their actual competence. It places them in hypothetical situations. Ultimately, these questions are way more likely to test a candidate's imagination and their skill at answering questions rather than their actual historical ability to do the job. For example, asking something like, how would you handle conflict between members of your team? Or what would you do if an angry customer complained? This brilliantly illustrates the core issue. Anyone with a bit of common sense can invent a fantastic textbook answer about mediating a conflict over a nice cup of coffee. It proves they know what the right thing to do is, but it gives you absolutely zero evidence that they've ever possessed the skill or the nerve to actually do it in real life. You want to ask for past examples, not future fiction. We have covered a ton of ground today, from the rigid flow of purchase orders to the psychology of the interview chair. But it all comes right back to that golden triangle. So what does this all mean for you? I want to leave you with this final provocative thought. Are your organizational processes actually protecting your hard-earned assets right now? And are your interviews actually predicting real-world performance? I highly encourage you to take what we've unpacked in this explainer, march right back to your desk, and ruthlessly audit your own operations. Because at the end of the day, effectiveness is never an accident, it's architecture. Thanks for joining me on this explainer, and I will catch you next time.